Welcome to the Hello Seattle podcast, a local perspective on living in and moving to Seattle.
Yeah, we're excited to introduce you to people, places, and communities that make living in our hometown special.
Hello, Seattle. I'm your host, Zach McDonald.
And I'm your host, Dan Keller, and we've got an incredible show today. This one, we're going to geek out a little today.
Oh, yeah, for sure.
We have got, in my opinion, one of the most stressful. So all of my clients are fully pre-underwritten. So there's no loan issues ever. The issues, I always tell my clients, you're out of the woods once we have the appraisal back, right?
Yep.
So we have one of the top home appraisers in all of the Seattle area. And I know this for a fact, one, because I've been talking with Adam. Number two, I asked our head of underwriting operations, I said, hey, can you go into our appraisal management system and give me 5 to 10 appraisers to call and see if they'd be interested in talking to Zach and I on our podcast. So Adam's here, Adam Franklin with Palbo. Is that right?
Yep,
Palbo
right.
Appraisals. You're going to learn a ton today. We got a great episode, but like we always do, before we get going,
We got to talk a little bit about the real estate stuff.
that's it.
Well, housing market, wow, things are picking up. And Adam probably knows this. He's been getting a bunch more appraisals, right? Is that what you were saying?
Absolutely. We've seen a pretty big uptick in purchases really just since the end of December. And with limited inventory like that, it usually means a pretty strong spring is coming.
Yeah, and that's what I've been experiencing. There's not a lot of new listings. There are new listings, but not at the rate that you're seeing all these appraisals. So
No, not at all.
So I'm in agreement. I think the spring's going to be hot. I think if you're thinking about selling, the spring is going to be a good time to do that. Dan, what do you got for us?
Yeah, better economic data over the last week, which is kind of normally when you see better economic data, it does cause a little bit of movement in the market. So week over week, we've kind of plateaued out, but we're nearing the end of the week. We saw really great improvement in mortgage bonds today. So mortgage rates were still knocking on the door of 7%, but we're under 7. So we're still in the 6s. So about 6.8, 6.9 on
That's
a 30-year
higher
fix.
though. That's higher than we've been talking about over the past few weeks.
Yep. But it's not 8%, Zach.
It's not 8%. Do you need to say your MLO number, or was that data from Mortgage News Daily? Where are you getting?
We should always do that. And remember, I'm not giving quotes here. I'm just giving ranges. And yeah, I like to use Mortgage News Daily because they survey some of the top mortgage banks and banks in the United States. But yeah, my MLO number is 115349, so we stay in compliance.
Nice. So in every episode, we also talk about the city that our guest lives in. So we've got a few questions for you, Adam, about just Bainbridge Island. So
Sure, yeah.
You live in Bainbridge Island. You mentioned to us, and I'm curious, how did you end up living in Bainbridge Island?
So unlike you two guys who I think are both from the area, I'm a transplant.
Okay.
My wife and I moved here from Atlanta. We were looking for a change of pace about 6 years ago after having our first child. And settled on the Seattle area, and then started kind of looking at the neighborhoods we were trying to decide where to live, and really settled on Bainbridge. We love the kind of quiet and slow pace. In addition to that, my wife works downtown, and it's honestly a pretty easy commute. If you're going into the central business district, it's hard to beat a 35-minute boat ride.
Is that the speedboat? You guys, am I thinking of the right?
No, so we don't have the speedboat.
That's West Seattle.
We've got the big car boats.
Okay.
So
you got the main ferry.
We got the main ferry. They do have a high speed running out of Kingston now.
Got it. Okay.
That comes from the Kitsap Peninsula.
Okay.
But we're on the main boat. And hopefully ferry service will remain consistent. It's been a rocky couple of years, unfortunately, for the ferry system.
Oh yeah.
Maybe they'll just build a bridge someday.
Man, you never know, right?
We're not the Bay Area.
We're
not the Bay Area.
I would seriously doubt it.
I agree. I don't think it's happening.
So if you're listening and you're not familiar with the greater Seattle area, let's assume we're right downtown Seattle on the waterfront. Zach, the real estate guy, talked to us about Bainbridge Island from a kind of a map standpoint. Where's Bainbridge relative to Seattle?
It's across the water.
Straight across.
Straight across the water, 3.5 miles.
Yeah, it's really not that far.
It's not that far. No, but it does take a little bit of time. I mean, what's your wife's commute?
It's about 35 minutes on the boat and about 10 minutes walking.
There you go. So pretty enjoyable. How far are you from the ferry?
For us from the ferry, about a 10-minute car ride.
Okay, so it's a 10-minute car ride, it's a 35-minute ferry, and then a 10-minute walk. So we're looking at,
You're looking at just under an hour.
Just under an hour commute, but you get to do 3 different things.
You get to do 3 different things.
There you go.
You know, the boat ride itself is incredibly pretty. And then, you know, in the evening on the way home, you have a glass of wine. In the morning on the way to work, you have a cup of coffee.
That's lovely.
It's better than sitting behind the wheel of a car, for sure.
Amen.
And better than being on a bus or on a light rail.
Absolutely.
Right?
Yeah.
You get a way better view than you do looking out of a bus or a train. So tell us about Bainbridge Island. What do you enjoy about living there?
So our family loves the outdoors. And so, you know, for us, we love Bainbridge because it is outdoor oriented. There's tons of parks, lots of public green space, lots of public beaches. We have 3 small kids. It has incredible schools and lots of opportunities for them to get outside as well. We were really kind of wanting to embrace that whole kind of open up the doors and let your kids run free.
Love it.
Kind of childhood for our kids that my wife and I both had. And Bainbridge is a great place to do that.
That's awesome. What would you say makes Bainbridge great for, you know, having the kids running around? You mentioned it's a great place for them to be free and run around. Why do you say that?
Well, I mean, there's no crime to speak of. It's a very community driven area. Everybody kind of knows their neighbors and takes care of one another, which is a fantastic thing to see in this day and age. And then just the island itself has been very focused on, you know, just creating recreational opportunities for kids for a long time. So there's a fantastic aquatic center. There's great sports leagues, you know, starting from pre-kindergarten all the way through high school and stuff like that. That's run by Parks and Rec. And they just kind of go out of their way to make it really a family-friendly area.
That's awesome. What sports are your kids playing right now?
So right now, Parker, my oldest, is playing basketball.
Okay.
And Quinn, who is 4, is doing swimming.
Okay.
And getting geared up for spring soccer. And then we have an 11-month-old baby who...
Not playing any sports yet?
He loves playing with balls, but, you know...
Is he walking yet?
Goes. He's not. He's standing.
He's standing.
He crawls great, and I think he just, you know, has figured out how to move around, and we'll start walking when he gets to it. He could if he wanted to.
So what's fascinating is you can't see this necessarily on YouTube or definitely not on the podcast, but Adam's 6'5", if I had to guess.
I don't know. How tall are you, Adam?
Doesn't shock me.
I'm just under 6'5".
Yeah.
Okay.
There you go. My wife's 5'11".
Okay.
5'10".
Yeah. You're gonna have
so
a
you
ball
got some
player.
height.
Yeah,
You got some height.
We've got some height.
Yeah,
You know,
you're
I was
running in the
researching Bainbridge Island, some stats, and I found this fascinating, and this is probably, you'll agree with this, but 80% of Bainbridge Island home buyers, current homeowners, when they go to buy their next home, they search to stay in the Bainbridge metropolitan area.
Yeah.
Like, they're not moving off.
No, nobody really is moving off. Like, it seems to be like a final destination place.
Yeah.
You know, once people decide to move out there, most people stay.
Yeah.
Every once in a while, you'll talk to somebody where the transition, especially from like the east side or something, just didn't work for whatever reason. The commute was too long.
Yeah.
It just didn't work out for them. But, you know, typically people move and stay.
Yeah.
You know, home turnover is really low.
Yeah.
And, you know, all in all, it's just a great community.
If you were talking to somebody who was maybe thinking about moving to Bainbridge, what's something that you would share with them that you wish you would have known before moving to Bainbridge?
You know, honestly, this isn't necessarily something I wish I would have known. Being in the industry, I already knew this. The best thing you can do in any market, but especially in a place like Bainbridge that is kind of off the beaten path, is find a really good local real estate broker.
Yeah.
Fair.
You know, somebody that really knows the market and can guide you through all the intricacies. Because Bainbridge Island has a relatively small population, but just like anywhere else, there's little tiny pocket markets. That if you're not coming from within Bainbridge already, you're not going to know anything about them.
Was that your experience? Did you work with an agent on the island, or did you work with somebody off the island that was trying to show you around?
We worked with an agent on the island. We kind of went through a really diligent process as to who we picked.
Excellent.
The person that we used is a guy named Bill Hunt, who had been on the island doing real estate for 40 years and has since retired.
Okay.
But he was fantastic. Him and his partner, Mark, also just did a great job for us. And the Bainbridge Island house hunt is something that typically takes over a year.
It's a prolonged process.
It is a long process, and so you get really comfortable with your agent or broker very quickly.
Yeah.
Because it's a long haul. There's never a lot of inventory, and Bainbridge being Bainbridge, a lot of the houses are a little quirky. There's not a lot of tract built housing. A lot of it was custom built for the unique needs of whoever built it, and that may or may not fit into what you want to use the property for.
That's fair. That's fair. So I love that you talked about that. I don't sell real estate on Bainbridge Island. I could, but I don't. And I agree with you that you want to have somebody, especially in a market like that, that is really familiar with the island and can point those things out. I've had clients like buy over in Eastern Washington, and sometimes they want to work with me, and I can't do it.
No,
sometimes I want to, but it's not a great experience for them having me show them a place that I hardly know and try to help them buy a house. It just doesn't really work. I totally
agree, but where you can still be an asset is referring them to somebody that does have that local knowledge.
Exactly.
And so you still have a trusted relationship with your client.
Yep.
And if you're able to steer them to somebody that can suit their needs, that's perfect.
I agree. And I think that's been my strategy is if I want to provide a great experience for clients. And if I don't think I can, then that's where I need to connect them with somebody else that can provide that experience that they deserve.
Yep.
All right, we got to talk about some appraisal stuff. And Dan, I know you prepped some questions to talk with Adam about, specifically around the appraisal process. You're the mortgage guy, makes sense. But I want to talk a little bit about some of the maybe questions a home buyer might have or somebody moving here might have.
Because you're definitely involved. You're involved as the real estate agent. I'm obviously involved as the lender. So I
just want the appraisal to come in at value. If I'm being honest,
that's all I care about.
Honestly, I don't really. I'm like just put the right number here, please, or a bigger one.
Yeah, we have a buyer that wants to buy it for what the seller wants to sell it for. Come on, man.
They agreed on it. Let's just make this happen. Now, obviously, that's just a joke, but it's real in a transaction. When you're in contract, it's not very fun to have issues with appraisals. So
and we rarely do, as a disclaimer, we rarely do. Out of 200 transactions, maybe 3 to 5 times we have value disputes or something like that.
I would say it's pretty uncommon. All things being equal, usually market participants are a pretty good gauge of what the prices should be. Every once in a while, you'll find something that's a little bit out of bounds, but it's not something that's super common.
Well, let's do this. Let's kind of do some, because again, this podcast is geared toward a potential home buyer, someone that's wanting to buy a home, that understands that this is a part of the process, but is unclear how impactful this is or what it means. So let's make it clear right now that a home inspection is different than a home appraisal. We had a good home inspector on here, but I get that all the time. Like, do we have to pay for the home inspection? And does the home inspection work like the appraisal? Believe it or not, that's a big question. I think, I'm like, no.
I wonder if it's because of the FHA and VA requirements, because those are a little different than a normal appraisal. At least for a conventional loan. And when I say normal, I mean conventional appraisal.
Or they think you guys, Adam, are going to inspect the house for them, and which you will inspect it, but not like an inspector.
It's different.
Not like an inspector. What we're looking for is just general overall condition. We want to look at the building components, like does the house have hardwood floors or wall-to-wall carpet? How many fireplaces are there? Do you have tiled baths?
But since we're on that, if you rolled up to a home to appraise it and there was a broken window, will you address that?
Absolutely. So anything that's going to affect the safety, security, or be a health hazard in the home is going to be addressed even in a conventional loan. And then if you're dealing with FHA or VA appraisals, there's much more stringent condition requirements just because they're federally backed. And those mortgages were really set up for people to be able to go into houses that did not need any type of significant repair and be move-in ready.
Okay, so a home inspection is different than the home appraisal. I, as a lender, do not want the home inspection. I want nothing to do with that. I don't even want to look at it. That's for you, the buyer. Now, the home appraisal, I, as the lender, manage that process. You order that through us. We typically order that through you. You're going to pay for it with your credit card up front. We order that through our appraisal management system. And then we don't just go to Adam, Okay, so it's important for you guys to understand we don't choose our appraiser. We don't get to do that.
That's why it was hard to get an appraiser on this show.
Yeah. So what happens is we send in a request, and then through random selection, round robin, whatever it might be, maybe Adam is selected. Most likely not. And so so there's an arm's length business transaction there, relationship there. So you have to understand that, but it is a part of the home loan process. Now, you made a great comment earlier. I have been, when I talk to my clients about the appraisal process, I'll let them know that, hey, the appraisal is, well, you're paying for it, so it's yours, right? But it's really not yours. The main function of an appraisal, Adam, you explained it really well. What's the main function of an appraisal?
It protects the bank.
Yeah.
The bank is our client at the end of the day. And while typically the home buyer will pay for the appraisal, we're responsible for making sure that the bank makes a good collateral decision, or at least has the tools to do so. And so, what we're really after is an accurate opinion of market value.
I love it.
Yeah, that's important. And I want you to understand that as a listener, as a home buyer, that your job, so let me ask you this. I think this is a great way to start. You get an appraisal request from a lender. There's a purchase and sale uploaded. Okay. Do you instantly go to, okay, the purchase and sale is for, $1.1 million and work backwards to find value there? Talk to us about how your process looks when you get a request.
Honestly, a lot of the times the contract will be one of the last things I look at, if you want to know the truth.
Wow.
That makes a lot of sense.
Part of the reason is because the whole point of having an appraiser is that they're unbiased.
There you go.
We don't have any skin in the game. We're the only person that's going to be part of that mortgage transaction that is unbiased. We're not paid on commission. We're not allowed to set our fees based on value. And we don't have the emotional attachment that a buyer or seller is going to have.
Okay.
And so, when we go in there, we want to go in with eyes open wide and looking for both faults with the property, but also all the positives.
Yeah.
So I will tell you this is funny that you mentioned Bainbridge Island. My one experience with a home mortgage on Bainbridge Island relative to an appraisal was during the COVID era. And, there was a lot of appraisers were just slammed, by the way. I mean, with refinances and the housing market, it was hard.
It was brutal.
So we had a client buying a home over there. It was like 1.8 million. And we couldn't get an appraiser to pick up this order. And we finally get one to pick it up. And they said they'll do it, but for $3,300. And our guys, and we're going to get to this in a minute. What is an appraisal cost on our fee worksheet on a loan estimate? We put $950, but it's $750 to $950, right? I'm like 30, and we needed to close, and so we're kind of backed into a corner. I went to the client, and I just said, "This is where we're at. There's no appraisers out there. We have one that's willing to do it, but it's going to be because it was waterfront, okay." Yep. And the client was like, "No problem."
Yeah,
Get her done.
Waterfront, really. I mean, honestly, a complex assignment like that, you're drawing from a much more limited pool of appraisers anyway. There's just fewer and fewer people that have the expertise to handle assignments like that.
No, I thought that was fascinating. So Bainbridge and appraisals, and it comes full circle here with Adam. But you were not the one, by the way, that charged that. So let's jump right into then how you mentioned the home purchase and sale is the last thing you look at typically. Then how is the appraised value determined?
So, the first thing I'm going to do is I'm going to get in touch with the listing agent.
Okay.
And gain access to the property so I can take a look around with my own eyes. The photos that are in MLS are great, but those are best case scenario photos, right?
Yeah.
And perfect lighting.
Right, Zach?
Sometimes with a little bit of airbrushing.
Yeah.
No airbrushing, come on.
There's nothing that can really beat just like boots on the ground inside of the house, getting a feel for it. And getting, not for nothing, an accurate size. County records are a lot of times inaccurate, unfortunately. And so, what we do is we measure things to 1/10 of a foot.
Okay.
And get an accurate square footage. And so, our site visit is comprised of getting an accurate square footage for the property and then looking at the building components and condition. As well as, looking at the neighborhood itself, what's going on across the street or down the block. There's all kinds of external influences that can have both a positive or negative effect on your home.
Yeah. So if you had a home on a street, similar type home, similar condition, similar size, but one has a decent view of the Puget Sound, for example, and the other doesn't, is that going to impact value?
Oh, it could have a tremendous impact on value.
Okay.
Views are one of those things in our market area that really can make or break a value.
Okay.
I mean, it's something that buyers are after. And it's something that is pretty quantifiable in the market area. Unlike some other aspects of a property, you can get really good data on views.
So speaking of that, you mentioned quantifiable. People will ask, how much does a view add in value, or how much does being on the water add? And I know it's subjective to the market area, but if somebody was to ask you that off the cuff, like I'm doing right now, what would you say a ballpark answer is for that?
Honestly, I can't even give you a ballpark answer.
Oh, come on.
Is the real answer.
Come on.
Every house is going to be different. And then just the day that we do the appraisal is going to have an impact on that. So, and I say a day we do the appraisal, how's that going to happen, right? Well, so the market reaction to things changes over time. If you're in a really hot market, some of these attributes on houses are going to have less of an impact. During the pandemic, we saw it where houses that were renovated, they weren't getting the same kind of top dollar that they would get in a more stable market because people were just grabbing at any house they could. Condition mattered a little bit less. Even, external influences like busy roads mattered a little bit less during the pandemic. As things kind of cooled off, just like you saw people getting home inspections again, you saw people being a little bit more careful with home selection also. Even with a limited inventory.
So what are some of the things that, since you can't give me an exact dollar amount for views, what are some of the things that typically do add value to a house?
So obviously, view adds value. We can start with that, and then you have things like positive locational influences. Are you across the street from a park, which is typically a great typically very very desirable in the area. Are you walkable to like a restaurant and retail district? Is super popular these days, obviously. And then condition. Do you have recent updates? Has your kitchen or bath been remodeled, in the last couple of years? Do you have any roof on your property? And then, depending on the area, what else is going on around you? Homes on the east side, you're seeing, properties being torn down. That could be an indication of, your house actually isn't worth anything. It's just your land.
Yeah.
Your land is worth $2 million, but the house isn't worth anything.
I mean, honestly, in that situation, what you're talking about is the house is worth a negative number because you got to get it off the lot.
Yeah.
That's terrible. It's funny, but it's true in some cases.
Yeah.
What would you say would devalue a house?
So things that'll devalue a house, obviously condition is the number one thing. And then, just like you can have positive influences from your neighborhood, you can have negative influences from your neighborhood. Common adverse influences are going to be, busy roads, backing up to shopping areas or close proximity to commercial areas that are less than ideal. So you don't necessarily want to be the guy that's next to a car dealership in the same way that you want to be a guy that's half a block away from the nice neighborhood restaurant.
Yeah, that makes sense. Okay. So a common thing that you might deal with in another market in the South, you mentioned you're from the South, pools.
Pools.
Okay.
Yeah,
Swimming
absolutely.
pools. I have a swimming pool and I bought a house with a 1970s swimming pool and it is a fixer-upper pool.
Yep.
It's not a very fun project, I have to say. It keeps getting more expensive. I'm curious, how much value does a pool add to a house, or does it add value to a house, or how do you typically evaluate that situation for people?
So, quick answer is sometimes it adds value, sometimes it adds no value.
You sound like a true
sometimes
appraiser.
It takes away from value.
Okay, so help us process through that when you're evaluating.
And here's how that kind of goes. For any adjustment that an appraiser is going to make, they're going to want it to be data driven and quantitative. What we go out looking for in that situation is other houses that have pools.
Okay.
It is unlikely given how few pools there are in this area of the country, that you're going to find kind of a perfect match, perfect comp for your house that also has a pool.
Yep.
And so what you'll do is you'll find a house with a pool, and then you'll go try and find a house that's very similar to that house that has a pool that's sold. And look at what the price difference is, honestly. We call that match paired analysis. This is kind of the most basic way of doing it. There's other ways that are a little bit more in depth. But all things being equal, if you can find a couple houses that are really similar, one that has a pool and one that doesn't, that price differential is going to be the pool.
Okay.
And so that's the easiest way to do it.
Yep.
And then, honestly, in more difficult scenarios, sometimes you look at the cost of constructing the pool itself.
Okay.
And especially for newer improvements, and then depreciating that based on where you see it in the market.
That makes sense.
And so you're not going to get dollar for dollar out of a pool, brand new pool ever.
No, or most any other update.
Most any other update. Sometimes you do see more positive influences on stuff, especially kind of interior improvements. Kitchens and bathrooms will be the ones that get you the closest to dollar for dollar for sure.
So while we're on this topic, since we're here, what would you say are improvements you can make to the inside of the house that are going to not just get you back dollar for dollar, but might even add value to the house? Maybe if somebody's either considering a purchase and trying to analyze if it's a good decision, or maybe they are trying to sell their house and they want to know if it makes sense to do that project before selling.
The second part of your question is great, and it's something that we're seeing a lot more people ask us because getting your house ready for sale, you do really want to make sure you're getting the most money out of your property. And if sinking 15 grand into a bathroom to get yourself 30 makes sense, sometimes that works.
Boom.
I would say kitchens and bathrooms and flooring are always kind of top of mind for people. Interior paint is another big one. And then after that, you start looking at mechanical systems and other exterior building components, stuff like roofs, windows, depending on the age of the house.
So it sounds like deferred maintenance.
Deferred maintenance.
Just taking care of that, like repainting, making sure the mechanical systems are up to date, getting a new roof on the house.
Having a lot of deferred maintenance can really harm you in the value scenario, unfortunately.
Yep.
And so, as I'm sure when you're bringing a property to market, most good brokers have kind of a list they go through to kind of bring it up to market area standards.
Yep.
And the houses, like estate sales and stuff that doesn't happen with, you will always see them dragging well below market value.
Which makes sense.
When they sell.
Which makes sense. It doesn't deserve to be priced at the market value. Dan, what do you got for us?
Yeah, so I one of the top questions that I get from my more elder clients, people that have owned homes before, maybe people that bought the last time before the new regulations came into our market, into our industry in the 2012-ish time frame, was, well, no, I want to order my own appraisal.
Not anymore.
Not anymore. And so I'm going to tell you from a lending standpoint, sorry, if you're getting financing, you can't. But this is an opportunity for you, Adam, I would say, to plug your business and plug what you do. But you do have people that independently order appraisals from you. So
we do, yeah. Our office does a good amount of private work. There are any number of reasons to order an appraisal outside of a mortgage transaction. Some of the stuff that we do for our private clients still is related to their home loan. We'll do stuff like PMI removal.
There you go.
Or a partial interest release if somebody is looking to subdivide their property and short plat it. A lot of times the lender, even though it has to do with them and they have to approve of all this, they will go ahead in those instances frequently and let you pick your own appraiser. Outside of that, we do stuff for estate planning purposes, divorces, unfortunately, and probate court as well. Relative to your home loan, if you're buying a home and you're getting a home loan through a lending institution, that's going to have to go through the bank. But if you have
if you'd like to retain, Adam, and you can do private work with Adam. So I already told him, I said, I already know a situation where I wish I would have known you 5 months ago. I would have hired you to help me win a case, because you could have helped me win. Another thing that, that comes up during, now I'm talking from the mortgage lending aspect, what happens? So I guess I'll answer part of this and then we'll play off of each other. So you as a home buyer, if you buy a home for, I'm just going to use a round number, $800,000, and the seller had it listed for $800,000 and you bought it for $800,000 and you feel good about that. And we get through the appraisal process and the appraisal comes in at $750,000. Okay. Eek. Now, my clients, if you're working with me, we talk about this up front, so you know what your options are. But let's talk through that so they know. I will say from a lending standpoint, we need to look at the appraisal. We need to see if the appraiser made some mistakes. If there were things that we could, do to add a rebuttal. But from an appraisal standpoint, if that's happened with you, walk us through that process on your side.
So on my side, obviously you never want to see anything come back, right?
Adam doesn't make mistakes, everybody. But other appraisers make mistakes.
That being said, an appraisal is in and of itself, it's an opinion of value. It's that appraiser's opinion of value. And appraisers are not infallible. It's totally possible for an appraiser to miss something in an appraisal. It's totally possible even just for an appraiser to do a little bit of bad math in the sales comparison grid. So I do think that your first step is a close review of the appraisal itself. Just making sure that all the I's were dotted and T's were crossed, and that the information that's there is correct.
So let's play devil's advocate. This happens. From a lending standpoint, I know the two things that I'm going to look at, but let's say we're looking at an appraisal that we feel like the home is worth $800,000. We feel like the appraiser is wrong. Okay. What are the two main things that you go directly to look at to find errors?
So the first thing I'm going to look at, honestly, is comp selection from an appraiser standpoint.
And comparable sales, you guys, if you don't know what that is, what's a comp? What's a comp or comp selection?
Comp selection, this is the primary way that we value properties in a mortgage transaction. We look at homes that are similar in size, quality, age, condition, lot size, that have sold recently in your neighborhood.
Okay.
And we look at how those compare to your property. We adjust for differences, and we come up with a value utilizing those properties. And so, really what I look for first, especially when I'm doing review work for mortgage lenders, which is another thing our office offers to lenders, is, obviously we're going to check just like the basics of data, because we like to, when we do a review, we go through every single point in the report. When we're looking at a reconsideration of value review, comp selection is really what's paramount, though. And so the first thing I'll do is I'll look at the comps that were utilized, and how I feel like they actually compare to the property. Do I feel like they're good fits? Do I think they have similar condition? Are they close by, or did the appraiser go a mile and a half out to find a comp?
So on a typical appraisal, how many? What is the minimum amount of comparable sales or comps that an appraiser needs to put on that report?
So the minimum that you're going to have is 5.
Okay.
And I would say that on a lot of appraisals, you're going to have closer to between 7 and 9.
Yeah, 2 to 3 pages.
Honestly, especially these days, as there's been less market activity, we're having to use less than ideal sales sometimes and make a little bit more adjustments than typical in a highly active market.
Cool.
And so, what we're going to be looking for first is we'll look at the comps that are used, but then we'll do our own comp search and see what was missed. And that really is your best option for reconsideration of value appeal, is coming up with some sales that the appraiser missed, quite frankly.
So what I heard you say, let's recap that. In regards to the comps, it's time. So time since it's been sold. So most recent sale,
yes.
And then location, time and location.
Those are the two most important things. In an ideal scenario, we have a bunch of recent sales, within the last 90 days that are all in your same subdivision or, within a mile. That's not usually how it works out,
Yeah,
unfortunately. So usually what we wind up doing is using kind of a combination of the two. We'll find some stuff that's in the immediate area as well as very recent. If you're really lucky, you got stuff that's in the immediate area and very recent.
Cool.
And so those are your best determiners of value. And so when you look at the reconsideration of value, did the appraiser overlook this house that's, a block over to go take this other house that's further away? Or is he relying on sales that are 7 or 8 months old when you've got something 3 weeks old?
Well, then another thing too, so you have comp selection. The other variable, and you and I were talking about this earlier, is adjustments. So you have comp selection and adjustments. Let's talk. So again, if you're listening to this and you've never seen an appraisal report, there's a reason why they email them and don't print them. We would have no trees left.
No trees.
Because what are they? Sometimes 50, 60 pages?
I would say the average appraisal report that we put out is between 40 and 50 pages.
Yeah.
Wow.
Lots of data, tons of data, and tons of pictures.
And that's changed from when I started. They've gotten about 3 times as big.
So the reason why I tell you that as listeners, you have to understand that this isn't just a 2-page report that, hey, I went and found 5 homes that look like yours, sound like yours, smell like yours. Here it is. It's a lot of data, and so maybe the adjustments, some of the data you can adjust for. Explain that.
And even the 40, 50 pages that you see as a mortgage lender, I've got probably another 50 to 75 pages that you don't see.
Wow,
that's just sitting in a digital work file.
Okay,
a lot of that is Excel spreadsheets that we work up to make our adjustments, and all of our adjustments are going to be market driven.
Okay,
and so we, as appraisers, what we love is data, right? Like we nerd out on math and we get really good at statistics.
Okay.
And so, our adjustments are going to be coming from the market itself. And so, common adjustments that you'll see are condition and quality, quality of overall quality of construction and current condition of the property. And then you'll also see stuff like view and location. We've already talked a little bit about both positive and adverse external influences. We've talked about what a view can do to your property. Obviously, waterfront is a huge value concern. But then also stuff like lot size, right? We live in Seattle itself has really high land values. The difference between a 5,000 and an 8,000 square foot lot can be huge in the city.
So under these quality and condition marks, there's a score, right? You mentioned this grid. So I don't want to really take a ton of time talking about that, but you guys have to understand this isn't just like, hey, we give it a thumbs up on quality or a thumbs up on condition. Like he said, there's 50 plus pages of additional data that goes into producing the actual report that is 50 pages. So a lot that goes into this. This isn't just a simple valuation. Now, I think it's important too, because I get this asked all the time on the lending side, how long does the appraisal take? They're wanting to know from me, from ordering it to having it back on my desk. I tell people it takes about 5 days. How long for you? How long does it take for you to actually make an appraisal report?
I would say, that's a pretty good, market for right now. During the pandemic, we had turn times, upwards of 3 weeks. We were just getting hammered with work both on the refi side and the purchase side. These days, about 5 to 7 business days is pretty much average for the market area. And what you'll see with that is from when we get in an order, we'll typically have it scheduled within about 48 hours. The inspection itself, for most properties, takes about an hour. Condos usually a little bit less. If you've got a really big or complex property, maybe an hour and a half to 2 hours on the high side. And then, you're looking at probably 2 to 3 business days post-inspection for delivery to the lender. A lot of times it'll kick around at the lender itself for a day or two before the borrower has provided their own digital copy. But all in all, these days, it's a pretty quick process.
Cool.
So tangentially, I want to shift this back to just maybe things that I'm more curious about. So I'll be selfish here, but explain the difference between an appraisal and a market analysis, CMA, that a real estate agent might do.
So, an appraiser spends all their time really doing deep dives into data. A broker or an agent, they've got other things to do. And so I think most brokers, that have some experience do a really great job at putting together CMAs. And a lot of times they're really pretty accurate, all things considered. But we do things a little differently. One thing is a CMA will oftentimes put an emphasis on pending or active listings. And as appraisers, we're not able to do that.
Yep.
So appraisals by their nature are retroactive. We're putting all of our emphasis on closed sales. And while we will have some active and pending listings included, that's more just to show an underwriter kind of where the market's headed.
Yep.
We're not going to use those to determine our value. And then when you're talking about a more complex property, CMAs get a lot more difficult. And
they do.
Unless you're really used to kind of delving into some of the more esoteric ways of making adjustments, it can be difficult to determine value just kind of in a CMA, which is a much more limited setup than in a full appraisal.
So, a luxury property. How often do you get brought in to do an appraisal on a luxury property?
Before it's listed?
Before it's listed.
Before it's listed, we do at least a handful of them a month. Typically, it'll be something that's a waterfront property. When we're doing pre-market listings, if you want to know the truth. There's so much additional complexity that goes into a waterfront property. I mean, figuring out what each linear foot of waterfront is worth.
That sounds like something I don't want to do, but it's important, right?
It is, because with waterfront homes, you're almost never going to find a perfect comp. And so you need to be able to, get accurate data and then come up with qualitative, non-subjective adjustments for stuff. And it needs to be, really data-driven.
Yeah, I love it. So speaking of data, online estimates are a newer thing, but you see them. I mean, almost everybody has an online estimate.
Yeah, everybody has an online estimate tool.
I have my own opinions about those, but what are your opinions about online estimates? What's the value that they provide, and then what are some of the maybe downsides of the online estimates or things people should be aware of?
So I think there's some inherent pitfalls in the Zestimates and Redfin estimates, if you will.
We're not trying to call anybody out, by the way.
sorry about using names.
I'm just kidding.
And they're honest with it up front, though. Both of those companies will tell you that they can be off by a lot. It's in kind of the fine, tiny gray letters at the bottom of the screen. And when you're talking about Zillow and when you're talking about Redfin or any of these other automated valuation tools that have kind of come into market, they're really more accurate when you're dealing with like tract subdivision housing. When you're dealing with, one-bedroom condos in the city, anything where there's a lot of conformity, they get you pretty close sometimes. Anytime that you have anything kind of outside of the box, or even just in the city, honestly, they can be much more difficult. They're fine when you're in a subdivision that has, 5 floor plans that were all repeated and sold over a 12-month period. But outside of that, they can get really inaccurate really quickly, unfortunately.
I love it. Sounds like I've been giving clients the right answer, because that sounds very similar to what I would tell somebody when they ask me about the online estimates.
No, if those things were any good, I wouldn't have a job anymore. So it works out pretty good for me, too.
We need you. I have a couple of questions. We're talking about adjustments, and I was listening to your conversation, and there's a couple things that people do with their houses, and these are things where I'm curious too, myself. Solar panels aren't very common here, but I'm curious, what value do solar panels add to a home, and how do you account for those on an appraisal?
So with solar panels, there's a handful of different ways that you can actually account for them on an appraisal. One, you can do the kind of market data-driven adjustments that we've already talked about. Looking for matched pairs and finding a house that has solar panels and finding one that doesn't, and looking at the difference. The other ways that you can do solar panel adjustments is, based on costs of the equipment itself, and then a depreciated return on investment if the equipment is a couple years old.
Okay.
The one thing that we won't consider as appraisers, especially for a mortgage transaction, is any perceived type of energy savings. That's never going to play into it, unfortunately. And a lot of lenders honestly don't even like us doing the cost approach when it comes down to some of the green building aspects.
Got it.
It's a little more common in Seattle because, I mean, while solar panels aren't necessarily common in our market, they're a lot more common here than in some other places.
That's fair.
Just because the state of Washington has had some really healthy tax credits over the last few years.
Yeah, I see them from time to time. It's pretty rare to do a transaction with them. So what about leased solar panels? What if the homeowner doesn't own them? They're just leased and they're on there. Does that any value to the property?
So leased solar panels are never going to be considered in the appraisal. So
Okay.
we're going to consider them personal property.
Yeah.
Now, you might have some conditions in your contract that say that the lease has to be paid off in full prior to closing or at closing, in which case those would turn into real property for an appraisal purpose.
Got
And
it.
we
So
would go ahead and put
if
that on
there's
there.
some type of payment plan in place and they're not paid off, they don't add any value.
They don't add any value because, I mean, really what you're talking about at that instance is a liability for your buyer. They're going to have to take over those payments.
Exactly. It was almost like I was leading you there a little bit.
I know, just a little bit.
Okay, the last question I had around adjustments was basements. So in Seattle itself, it's pretty common to see people finish out an old basement. I had a house in Edmonds that had a daylight basement. And the question is, how much value does it add to finish out a basement? It seems to add a lot of square footage, but is it looked at the same as square footage above grade?
So all basements are not created equally. And appraisers look at basements a little bit differently too. For an appraiser, anything that is below grade at all is basement. So it could be that it's 6 or 8 inches, just like a single step down. And we're
Maybe
gonna
like a
call that-
split level house or something like
Split
that.
level or split floors are a perfect example of that, where it's pretty much daylight all the way around. We're still going to call it a basement, just due to some national measuring standards that we utilize.
Makes sense.
We want to be comparing apples to apples. And so the only way to do that is to make sure everybody's measuring the same way, kind of. Now, that being said, all the basements aren't created equally. And it's not uncommon to adjust for basements that have more utility differently, even
Okay.
within a report. The square footage of a basement per comp could be adjusted differently based on the quality of the improvements in the basement.
Okay.
Stuff like ceiling height plays in as well.
That's fair. So if we were looking at a house that was 2 stories above grade and we were looking at a house that was a 1 story with a basement, same square footage. The house above grade, that house is going to be worth more, right?
9 times out of 10, yes. You will every once in a while wind up with some instances where you have maybe like a reverse floor plan, where some of these houses kind of over in Clyde Hill where they have the height restrictions, where you wind up with all of your living areas on the main floor and all your bedrooms in the basement and the same quality of finish, in which case, in that instance, a lot of times that square footage is going to be considered at the same rate. All things being equal, though, basement square footage typically have less utility. Even with a daylight basement, you're going to get less light down there.
Yep, it's true.
And you're going to get above grade. And it's just typically got a little bit of a price penalty compared to above grade square footage.
Is there any type of percentage you can give me roughly when somebody's looking at it?
Unfortunately, no. And I hate to keep saying
I know.
this.
I get it.
It varies from house to house.
I get it. I've heard somebody say, square footage below grade's worth half square footage above grade. But that sounds like, again, a generalization. Does that sound remotely accurate, or is that pretty off base?
That is a really oversimplification of the way that we do it. And part of the reason is, sometimes you'll wind up with a basement that's half finished.
Okay.
Right.
Yeah.
And so what we're doing there is valuing the unfinished portion and the finished portion.
That's rough.
At different rates.
I think this last conversation we just had could be the most valuable one of the day, because I get backed into a corner explaining to clients all the time when like a split level and they're like, how did the appraisal not come into value, or why this? And I explain it to them, and I'm the bad guy.
And it can be
there's
confusing.
3 bedrooms down there.
Make them call the appraiser next time they have a problem with the
Our
value.
phone number is in all those reports.
Yeah.
As is our email
But
address.
it's good to hear that. So you're hearing it from a professional appraiser. And now the other thing too I want to say is, if I had an appraiser appraising all of my clients' homes like Adam every single time that was a data-driven guru that put in all the extra work that I could trust. If an appraisal came in low, I would just trust him because I knew how much work, time, and effort he put into it and knowledge you have, right?
They're not all created equal,
no,
right?
They're not. So I really admire that about you, man.
We try and be at the top of our game.
Well, you are. You definitely are.
I was thinking too that if I run into properties that are difficult, I'm giving you a call.
Yeah.
Right?
Yeah,
I think there's a bunch of I don't know. I don't want to say that. I'm not going to say it.
Well, I'm
just going to say I think that you have a great approach to appraising. I think that homeowners deserve a data-driven approach, and the level of detail is amazing. And you're right. I don't have time for that level of detail. He doesn't have the time for that level of detail. And to be honest, we have some type of skin in the game, right? So having somebody like you that is unbiased, your job is to report the facts.
Well, I even love too that he wouldn't even, when you asked for like guesstimates or estimates on things, he's like, I'm too accurate. I'm too good at my job Zach, unfortunately, to give you that.
What he's going to do after we get off camera is he's going to give me those so that I can say them, but it didn't come from him, right?
Let me put it this way. Just within this week, I've adjusted basements at 50%, 75%, 80%, and 100% of GLA for something that was basically the same as above ground square footage.
Wow. Okay, so we can go with about 75%.
Yeah, so I mean, I'm telling you, it varies with each particular property.
Yeah. But in general, I love how you explained it because I'm going to use that from now on. In general, a basement, because of the daylight and the functionality, I guess, if you will,
the
square footage is worth less.
You're going to have inferior fenestration with a basement 99% of the time.
Yeah. So let's wrap with this. I've got one last question that I get a lot, and then I'm going to leave you all with an incredible, and this is a shock to you. You don't know what I'm going to ask, but
I don't know what he's going to ask either. This is exciting.
And this is going to help all you guys listen and to make a really good decision. It'll help you make a good decision when you're buying your next home relative to value. But one of the questions I get asked a lot is, Dan, can I attend the appraisal? Or the appraisal and talk to the appraiser?
So you can, but you probably don't want to.
Okay.
Honestly. Obviously we deal with borrowers. A lot of our business is refinances. On the purchase side, unfortunately, there's not too much information that a buyer can bring to the table. The parties that we usually really want to talk to are the listing agent. Honestly, is going to be our primary resource.
Very few appraisers actually call me when I'm, just to be honest. Really? They like book an appointment online, show up, go, don't even call me. Like a lot of times I have to call them.
Wow.
That's shocking to me. And that's something that I hate to hear, because
it's true though.
An appraiser should always want to be able to get in your mindset when you're pricing a property. At a minimum. There's
just something about it when an appraiser does call me that stands out, which is why I feel sad that I'm saying this, but that's why I know it's true, because I'm always surprised when somebody calls me and they've got 2 or 3 questions for me. Hey, how many offers did you get on the property? How'd you come up with this price? Do you have any comps that you want to send my way? Like there's a few questions, right? That a few will ask, but many just show up. I was at this is terrible. I was at a house doing a showing. I think it was like a second showing, or we had just gotten under contract. The appraiser showed up in his basketball shorts and his t-shirt and flip-flops. The guy walked into the house. I was like, hey, how's it going? He's like, oh, I'm the appraiser. I'm like, okay, cool. I'm the real estate agent. Nice to meet you. And he's like, yeah, I'm just going to walk through the house real quick. The guy was gone in like a minute.
Snap a photo.
He took a couple pictures with his phone really quick and was gone. And I wasn't there for 30 minutes and he didn't seem to be there for very long. So that was disappointing.
I would agree. It doesn't really bode well for some of the guys out there on the street. Now, there is something happening right now in the appraisal industry, and this could have been what you ran into. A lot of lenders are starting to use bifurcated reports. I don't know if you're familiar with these, where they send out a property data collector who is not an appraiser to a property to take some pictures, some measurements. They upload that online and with a back-end appraisal completed by a certified appraiser, but they never go to the property. A lot of appraisers aren't necessarily comfortable in doing these assignments. And then, for your standpoint, just for the security of your sellers, the property data collectors that are being utilized, they're not background checked.
Okay.
They are kind of similar to Uber drivers. Sometimes they're real estate agents, but a lot of times they're people without any real estate background at all.
Okay.
And they're really just there to kind of take some pictures and upload them.
I feel like I hit a nerve on accident here.
They're a particular pain point in the appraisal industry right now.
Fair.
Yeah.
And it's just part of the modernization of appraisals that's been going on for the last couple of years. I'm sure you're familiar with this.
Yep.
It tends to happen kind of in the lower price ranges. But it's possible you ran into one of those guys and not an actual appraiser.
Yeah. Well, let's anchor it down with this because this is a good one, okay? This is, I think, what everyone showed up today to learn, okay? About the appraisal process and then this question.
I'm really excited about what's about to come.
You're a home buyer.
Okay.
You're a home buyer. We were just talking to a guy that is an expert on value in real estate, okay? What advice, Adam, do you have to home buyers for buying their next home that one, it'll make sure to ensure that it's a great investment, but two, that it'll increase the most in value. So if you're going out buying a home, what are some things that you'd look at going, hey, this one's got better potential for more appreciation than that home?
So, I mean, I'll tell you what I look for when I look for my own home. So the first thing I'm going to do is I'm going to contact a trusted real estate broker, and I'm going to work with them. And I'm also going to contact a trusted mortgage broker.
Okay.
I'm going to work with them to make my transaction smooth. After that, you never want to be the biggest dog in the neighborhood, right? You never want to own the biggest house. You never want to own the most expensive house on the block. You've got nowhere to go, unfortunately. And so I look for houses typically that are in great shape, but maybe could use some modest updating, and get that return out of equity that way.
Great shape, modest updating. I love that. And I love that too. Never buy the nicest house on the block. I've said that for years.
Yep.
You can always make yours one of the nicest, but don't go pay premium for the nicest.
You can always make your house the nicest house on the block, but that house that is the most expensive in the neighborhood is always going to appreciate the slowest.
Yeah. So if a real estate or mortgage professional or someone wants to reach out to you and they get in a predicament, whatever, not that any of my clients ever get in a predicament.
What's a predicament?
But, a tough situation.
Just kidding.
How would they reach out to you? Is there social media? Do you recommend they call you?
Go to our website, pabloappraisal.com. You can contact us directly through the website.
Okay.
We don't do a lot of social media.
Okay.
Just kind of the nature of our business. We work primarily with lenders and attorneys.
Okay.
And so we keep a pretty tight circle in general, but we are always open to doing private work as well.
I love it. So PALBO appraisal.com. There you go. PALBOappraisal.com.
Beautiful.
Adam, thank you for your time today. This was long, but it was good. This was really good, Zach.
This is super valuable, and I learned a bunch today too. So
I had a lot of fun, guys. We'll do it again sometime.
Thank you.
Awesome. Well, we got to wrap this up with a goodbye, Seattle.